Hi, everybody. Happy Friday. I'm sure we're all excited that it's Friday, and I'm also excited to welcome everyone. It's a pleasure to have you here for another edition as we continue into day 5 of our core summit, which has been focused on a very hot topic this entire week, cannabis. I'm Jessica, Director of Core Partnerships here at Core Connects, and I'm excited about this session. Today it's going to be broken up into 2 parts. So the first part of our session, our seasoned core partners are going to be talking about ATS, which is something that is really coming to the forefront in light of the current market conditions. Many investors are turning to private capital market to make long-term investments, which has increased alternative trading systems and secondary market trading for Reg A, Reg CF, Reg D, all of those securities. For those that may be unfamiliar with ATS, this is an alternative trading system, which is a non-exchange trading venue that matches buyers and sellers to traded securities. We've got Peter, our Chief Revenue Officer here at Core Connects, who will be moderating this session. And we have some amazing experts that are going to be speaking more in depth about this topic. To close out your session and this week's amazing Core Summit, I'm proud to introduce Oscar Joffrey, our CEO of Core Connect. So right after our ATS session with Peter, Oscar and Derek of Cannabis Wiki will be doing a roundtable. With so much experience in this space, the two of them are going to discuss best practices for companies in many common areas that come up when it comes to raising capital in the cannabis space. Peter, I will let you take the floor from here.
Hey, thanks very much, Jessica, and happy Friday to all of you. So as Jessica indicated earlier in the week, the focus on the regulations, focus really around everything from preparations to the marketing to the issuance and settlement of the primary raise, whether the exemptions are CF, Reg A, Reg D. But what about liquidity? That's what we're going to talk a little bit about today. And private shares and can they trade? As we know, it's still in the early stages, and our panel here is going to give us some key insights on that. But hopefully we can demystify things a little bit. As technology, the regulations, the brokerages themselves, how they're all evolving specific to not only the regulations, but more importantly to changes in the marketplace from a tech perspective. Our panel today is a diverse group as we explore, alternative trading systems or trading systems. What are they? Where are they at today? Where they might be headed? How they relate to not only this sector, but digital securities and to the public at large now and into the future. So it's my pleasure to moderate today's panel consisting of Douglas Borthwick, Chief Business Officer at INX, Curtis Spears, seasoned broker-dealer with Andes Capital and its CEO, and our own Chief Scientist, Dr. Kiran Garimella with Core Connects to assist with technology in relationship to the regulations. If I can go around the table first, and gentlemen, if you could tell us a little bit about yourselves and about your companies, and then we'll get the panel going. And if I can reach over to Douglas, and if we can start with you.
Super. Thank you very much for having me. I'm Douglas Borthwick, Chief Business Officer at INX. My background was 10 years at Morgan Stanley, running foreign exchange derivatives. I ran the Latin America group for Standard Chartered. I ran a proprietary trading business at Merrill Lynch. And in 2018, I heard about a guy in Israel that had gone to the SEC and said, I love ICOs, which at the time had raised $25 billion, but I think they're illegal. And I think that I'd like to have a website and sell a registered security through that website. Now, to me, that was the coolest thing I'd ever heard. That the CEO was Shai Datika. I flew to Israel, never having gone there before, met with them, and decided I want to be a part of the team, whatever it took. We spent 950 days working with the SEC to do the first ever prospectus offering of a digital security on the blockchain, native to the blockchain. We didn't sell equity in our company. We were selling 40% of our profits in the future if we ever have any. And it was based upon a vision that we wanted to have a global digital investment bank, both a broker-dealer, an ATS, a transfer agent, and cryptocurrency trading licenses. Well, we ended up raising during COVID $85 million from 7,250 individuals in 74 countries, and have used that to execute to buy the broker-dealer, the ATS, the transfer agents, incorporate them all together and the cryptocurrency trading business. And now we're in the business of raising capital for companies the way that we did it, not just with prospectuses, but also Reg D, Reg S, Reg A, and also then go into secondary trading and allow them to trade. We think it's also important we use cryptocurrency as well as payment rails, whereby people all around the world can send in crypto rather than having to wait a couple of days to go by if they use the traditional banking system by wiring capital. So that's the business I'm in today, raising capital for companies, but also taking listed companies that are already on current exchanges around the world, taking their equity and then tokenizing that in a legal way and then having that trade on our platform. And we're working on that with US issuers' permission in the United States and without permission as non-sponsored equities for any listed company outside the US. So very excited to be here. Thank you very much.
Hey, well, thank you very much. Thanks for the thorough overview on the company and the journey of INX as well. Hey, Curtis, so I want to flip over to you from a CEO of a broker-dealer that's seeing all these regulations come into play. Maybe you can give me a perspective of your landscape and your company.
Okay, yeah. So Curtis Spears, CEO of Andes Capital Group. We're based in Chicago. Been around for 20 years. So we're kind of an old school firm. We started out really just doing trading in equities and fixed income in the public markets, and then which was a decent business for us. But over time, we slowly saw that there's been a change in the marketplace, right? And so about 5 years ago, we decided to focus just solely on the private market. So doing mostly a lot of Reg D raises in the institutional space, a lot of private equity, private real estate, and some VC. And then just in the last couple of years, seeing more of a shift in the marketplace, started to do more raising for smaller investors and smaller deals, what have you. And now in the last year or so, really converting over to a Reg D, Reg A plus, Reg CF type of shop. Me personally, I've been in the business for about, 30 years or so. Actually started out as a portfolio manager, managing index funds, where back in the day, you'd have 7,000 US companies in the Wilshire 5,000, which has gone down now to about maybe 3,500. So once again, just kind of showing that shift. But I worked as a PM, worked in sales on the institutional side. Actually worked as a consultant for a little bit, consulting to pension funds, foundation endowments, what have you. Spent my first stint at a BD called Gartner Rich. Not sure if you guys know the firm, but you might know the person. If you ever saw the movie Pursuit of Happiness, the guy Chris Gardner actually ran his broker-dealer for a couple of years back in the around 2010 or so. Now I'm at Andy's running the shop here. So,
well, terrific. Love the film, by the way, as well. So
great
a little bit of shout out on that. Dr. Kiran K, our blockchain technology aficionado. Maybe you can give a little bit of background on you, and we'll jump into a bunch of questions.
Of course. I'm Kiran Garimella. I'm the chief scientist at Connix, and absolutely thrilled to be here. Thanks for having me on here. And most of my experience has been in the financial services sector. I do have a PhD in AI and machine learning from University of Florida. But most of my life has been in the corporate world. So I used to be a global CIO for a General Electric division and various other roles, many of them dealing with data analytics and very advanced, interesting ideas like this. And along the way, I've written, 3 books, 2 on business process management and 1 on AI plus blockchain. But most of my experience has been really in the financial sector, and I've been personally myself a trader. I used to trade stocks, options, and commodity futures. And I almost narrowly avoided becoming a hedge fund manager because a firm in Chicago, actually from CBOT, they said, oh, this stuff. I used to write a lot of AI algorithms, to do trading strategies and so on. They said, oh, would you like to take this on? But I said, nah, that's a little too outside of my wheelhouse. So anyway, I met Connix, Oscar, the founders, and a couple of years ago, and their whole vision of the private markets. I know the public markets, pretty okay. I'm good with that. But this 50 to 60% of the world's GDP is coming from the private markets, and nobody knows about these people. It's like there's no liquidity, there's no technology, and that has to be the biggest challenge. So I said, hey, I'm at a stage of my life where I would love to take on something like this, and so here I am.
Okay, Kiran, Dr. Kiran, thank you so much for that. So it sounds like the one big common denominator out there is change and a dynamic shift, as far as democratization of capital, as far as the convergence of technology, as far as greater participation from the private and the public sector. Well, the private sector, basically allowing anybody to invest in any type of digital security or digital asset. So let's jump in really with the basics, I guess, and maybe I can reach out to you first, Douglas. On a lot of people are going, I got a message here. He goes, really, what is an ATS? I mean, let's take it from the basics. There's many different flavors, and you're the perfect guy to give us your perspective on that, and from a secondary standpoint.
Well, an ATS is sort of a step down from a national exchange. I think we all know New York Stock Exchange and NASDAQ, and these guys are linked into every broker dealer that ever existed. And then there's a step a little bit lower, and everyone knows OTC markets. OTC markets has something like 13,500 companies on it, all public companies, but they're doing a little bit less volume, and they're trading on this ATS, this alternative trading system. And so it's a marketplace that's regulated by the SEC, FINRA, but at the same time isn't really doing the huge big companies. I think the largest company on an ATS is probably GBTC on the OTC markets. That's the way that you can buy Bitcoin in your 401k. But the ATS is sort of it's a way for you to trade mostly public equities, and then there's a little bit of a shift. And ATS has started listing private equities as well. Now, private equities got a little bit of a difference, a little bit of a tang to it, in that there's a maximum number of holders you can have in when you do a Reg D or Reg S, and it's something like 2,000 people. And there's also lockup periods. If the first year after the issuance closes, you're locked up for a year. You can't do any trades if you're in the US and you're an accredited investor, whereas the Reg S's can start trading after 40 days. So there's all sorts of limitations and laws when it comes down to the private issuances that are trading on ATSs. But what they do offer is liquidity. And liquidity is something I think that a lot of people want. And sometimes a friend will say, why don't you invest in this real estate project? And you know that when you put the money in, that it's going to be locked up there until your friend decides it's unlocked. Whereas when you list it on an ATS, if you want to get out after your lockup period is expired, you can. Hopefully there's going to be someone there that's bidding for that same asset, and you'll be able to find the liquidity and get out of it. So I think that that's quite exciting about how the ATSs are coming into the private space, in that it's giving the seemingly availability of liquidity for folks to get out of things. Now, when you're doing a Reg A offering, obviously that's a different kettle of fish, where you can have an unlimited number of people that can buy into it, and you're going to find a lot more liquidity. We've done a full prospectus offering that trades on our ATS. It's got 9,300 odd holders of it now, and there's liquidity. In fact, I do more liquidity on my ATS and my token than I do on the Neo exchange and the OTC for the equity in my company. So I think that when you have exciting developments or exciting issuances and they trade in an ATS, you can have good amounts of liquidity and be very excited about it.
So you hit a couple of key points here. One of them being, it sounds like the regulations are also a guiding force here, and I'm going to touch on different members in our panel here. So we know, for example, a Reg D, you've got 2,000 shareholders, and we hear this term tokenization, and I get a lot of firms coming and say, hey, I want to digitize my asset. I want to tokenize my real estate. And relative even to the cannabis space, I've got real estate property that we're growing on, and we want to cut large volumes of parcels, or we'll call it tokens. Really, an underlying thing is just how I'm breaking up that physical asset to smaller pieces for investors to invest in. But if I've only got 2,000 people and that I can actually shareholders that I can have on, say, a Reg D, how does that affect, let's say, the tokenization or a securities offering for a secondary market in the future versus, say, a Reg A offering? It would seem that the regulations are as important or more important than the ability to break it down. Do you start with the regulations first and say, what was the regulation for that class of shares issued to begin with? What was the structure of that deal? I'm going to throw that at a couple of you guys, like as far as maybe I'll throw it at Curtis first. Just say, hey, when you're getting customers with, on a Reg D, are you getting that request to say, hey, I want broader liquidity after, let's say after 12 months?
Yeah, I haven't really seen that too much per se, but it is really guided by the regulations. But so folks who start out with a already existing offering, if they do want to offer more access to their investor base, they do look to do it with tokens as opposed to securities. So that's really the route they like to take when they
Okay,
can.
so let's break that up. I mean, because Douglas, you live we live in Cran and I live in the world under under Reg CF and Reg A's and Reg D's, and we digitize securities under those exemptions on the primary side of it. So the focus is really on that primary, not the liquidity aspect of it. Can you maybe give me some color or some definition when we talk about tokenizing something from a securities perspective, or trying to tokenize an asset from a non-securities perspective? I know that the SEC, there's a lot of questions around that today. Douglas, maybe you can give me some insights on your experiences, because I'm sure you get it from all angles right now.
I talk to 3 to 5 issuers a day. And I've been doing that for about 2 years now, about tokenization of assets or of cash flows or, really anything. And we're not guided by regulations. That's the foundation. When someone comes to me and they say, I want to raise $20 million, and you say to them, okay, well, do you have an audience that maybe wants to buy this already? Because otherwise, you're tokenizing something, and who's going to come and buy it? But tokenization, really, you just have to carve out, is it a cash flow? Is it an asset? How do you want to divvy it up? What's the minimum ticket size that you want to use? A lot of issuers do wonder about, really, there's 3 things, I think, when it comes to the primary offering going into the secondary. And we do primary as well at INX. One is they worry about, well, what's the legal aspect? And we put them in touch with the lawyers, and they can walk them through what a Reg D PPM looks like, or what a Reg S PPM looks like, or Reg A, or full prospectus offering. That's outside of my control. That's them working with their lawyers directly. What I do is I teach them what the blockchain can do for them and why that's exciting, and maybe a little bit more exciting than regular paper as a security, mostly because of the aspect of portability. At INX, when we mint tokens, we deliver the tokens, and then you trade using a MetaMask wallet on our ATS. And so you self-custody. Now, self-custody's got some great aspects, and it can't be rehypothecated. So that means that you can't short a stock or a token that's trading on our ATS because of the self-custody quotient. But they do think that on a marketing side, I think it's important for a lot of companies to be able to say to their investors, listen, I know you're putting in $100,000 as the minimum ticket into this primary offering, but don't worry, in a year's time, you're going to have liquidity, hopefully, on this ATS, and you'll be able to sell some of this if you want to, if you have a cash event and you want to get out of it. And I think a lot of people, when it comes down to primary offerings, are looking for, what's my liquidity event? I invest today. Will there be an opportunity for me to get out of it tomorrow? And I think it's a great marketing tool that issuers can use.
Okay, well, thanks for that. Hey, so Kiran, from a technology perspective and dealing with things like permission blockchains and decentralized chains, non-block, all of this stuff. I mean, it gets really confusing to that average individual. And one of the comments that I hear sometimes is companies say, hey, I've got my Bitcoin over here and I've got my securities over there, and I want to use my Bitcoin to buy my securities. What are some of the challenges, or what are some of the, and it's still early in the game, what are some of the challenges that you've seen from a technology perspective as it relates to, say, compliance? Oh, I think you're on mute, Kiran. No, you're still on mute.
Yeah, while he's on mute, I can answer that question.
Yeah, okay. Yeah, thanks, Doug.
When someone buys in the primary, we allow people to buy using Ethereum, USDC, USDT, or dollar wire transfers. The reason why we use USDC, USDT, and Ethereum is because they can send it through a MetaMask wallet that we've already whitelisted. So we know that the money's coming from that person that said they were going to invest. And we think that's very important. But on the secondary side, we only trade against the dollar. Now, if someone wants to send Ethereum in and then have that cashed out into dollars and then use the dollars to pay for the security, we can do that, but we can do that because we have MT licenses throughout the United States. And so if someone sends in Ethereum that's immediately turned into dollars, the dollars are then credited, and then the dollars are used to buy the security. But one of the most important things is, if you allow someone to send in from a wallet, let's say Bitcoin, well, you don't know that the Bitcoin came from their wallet. And that's, obviously important on the KYC AML type side. So, we have it such that if someone's sending in crypto, it's coming from a wallet we've already whitelisted and we've already KYC'd the person that's going to be using that wallet.
So you hit on, I guess, some super important key points, and it's I've got a crypto asset. I've got it. It's in my personal wallet. It must be converted to fiat. I mean, that's the only way you can purchase a security, is what I'm hearing you articulating here. And the technology is now facilitating that ability on various platforms to have that settlement time, so that the buyer or the buyer of that security with their crypto asset is well, I guess what I'm trying to say is there's a settlement period that's at a fixed price, and the text there so that everybody's agreeable, because it's so volatile. A question that comes up often when for me sometimes is individuals will say, "Hey, how does that actually work? Okay, I've got my Bitcoin and I want to buy the security, and as you indicated, that Bitcoin has to be converted to fiat." And there's a settlement time lag that obviously that investor has to agree upon, because buying a security, there's a time lag. It's not like I'm in the e-commerce space. There's a time lag to say I need to go through the KYC and the ID and the AML. Do you run into any challenges with the investors themselves not quite aware,
No, because it's instantaneous. If you've got someone in Japan and they're buying a US equity, they've got more volatility in dollar yen today than they would in Bitcoin. And they understand that if they're selling yen to buy dollars, that there's going to be a lag. Now, there's a lag of goodness knows how long if you do it through a bank, at least 3 business days. Now, with crypto, you send it over, it's instantaneously, we convert that into US dollars, and the US dollars are used to buy something. And, we're charging 0.2%. If you go through your bank, maybe you're charged 5%. So it's a very, very efficient way to move money across borders and, in the US, because it really is so fast in terms of how you can move that money.
So, Kiran, do you have anything to add on thoughts on that point?
Can you guys hear me now?
Yeah, we can hear you now.
I apologize. I don't know what happened, but try to back out. I think, yes, there's there are a lot of moving parts here, and the regulation keeps changing, and people's understanding of how all this works also keeps changing, right? And I think the biggest challenge, it's not really so much as a technical challenge as more as a mindset challenge. People, when they have a certain mindset of how they think these things work, they want it to work that way, and then they forget about some of the other risks about it, right? And securities, unlike the crypto coins and cryptocurrencies, which are payment instruments, securities are not bearable instruments, right? I mean, they're non-bearer instruments. And, it's fine to say, hey, I own my securities in my wallet. I can simply send it to somebody else, and if it's lost, it's lost. But what actually happens is that the possession of the security, whether it's represented as a token, a digital asset, an NFT, doesn't really matter. It doesn't really mean a whole lot, because you still have to register that with the company. I mean, think about a lot of the business models where we have revenue share arrangements or dividend payments. Who do the dividends go to? Who is a person who acquired in a trade the token or the security? Are they legit? Do we know who they are? And will all these things stand up to the contract law, so to speak, to enforcement of contract law? Where is the recourse if I lose all my tokens in the wallet, right? So these are some of the challenges that people will face individually as they get deeper and deeper into this stuff. The public market have all this already built into them. Yep, there are many things they can improve, but they are there, right? So if you look at it from a technology standpoint, I think the challenge is to kind of overcome and get around some of those mindset perspectives, if you will. But the other side is also, I kind of break down the operations of tokens and digital securities in sort of three parts, right? So part number one is regulation. If there's a lockup period, there's a lockup period, and your protocol needs to handle that. That's a regulatory, right? But there are also corporate restrictions and corporate things that are going on within the shareholders contract or the sub-agreements or the shareholders agreement, things such as the lockup periods, the first rights of refusal, tag-along rights, voting rights, non-voting rights. There's so many things that are happening there in that space. How much can people buy? If you buy more than 5% of the outstanding float, do you have to get a director's resolution to approve that particular trade? So these things are baked into many of the shareholder contracts. So when we build the core protocol and we look at all these things, we see that there are no two shareholder agreements that look similar, especially in the Reg D side of it, right? So there's a bit of a challenge. The other side, of course, is can you use your securities and tokens as a true asset that you own? If you do, then you can actually margin that. You can actually take out a loan on that. So there's a lien on it. So all of these provisions need to be looked at. It's very early days to look at a lot of that flexibility, but if you don't have the right infrastructure and the right protocol in place, you will run into these challenges, and you have to look at some of that, right? So It's a question of regulatory risk, but also risk from perspective of what happens if I lose all of this? What's my recourse? So we've got to build all these provisions into the technology itself.
When we spent time with the SEC, we had this discussion about the SEC essentially said you can't lose your 401k, your IRA in a boating accident. What if you lose your wallet?
Yeah.
And we came up with ERC 1404 along with TokenSoft and the SEC to allay that, in that you can't send your tokens to somebody else that's a complete unknown. If you lose your wallet, that's fine. We can revoke from your lost wallet, reissue to a new wallet. And if someone hacks your wallet, the token looks to the blockchain and says, is the wallet I'm moving to whitelisted? And if it's not, it refuses to move. So the first part, I guess, of the explanation you gave, it has been solved. We've solved it and got the SEC sign off on it. So, I think that a digital security is probably safer than a security sitting in your drawer, which could be picked up, walked off with, and lost. With the digital security, we've made sure that we've created that whitelist or that walled garden to make sure that the only holders of this are people that the issuer and the ATS knows.
So it sounds like the potential is amazing, but there's a handful of players that are solving all the problems, such as INX and dealing with the SEC and digitizing these securities and tokenizing various assets. But there also sounds like there's a lot of, I guess, companies out there that might be somewhat untoward. Would that be a good way to say that, Douglas? Where I've digitized the security, I've got all these tokens because the marketplace at large, I'm getting an echo, but marketplace at large is hearing things like, wait a sec, how come somebody lost all these assets? What happened to my Bitcoin? What happened to my ICO? So it sounds like there's really good regulations there, and it sounds like there's really good companies there that are taking all the compliance considerations in. And I think that's what gets to the confusion to the public. They say, if they're doing this over here this way, why can't I do it in the same way? Or where's the friction points, or where's the problems? Why all the confusion? Any thoughts from that perspective?
Many people take the Facebook approach, I think, early on in tokenization and said, look, first we'll break it and then we'll fix it. We took the approach that listening to the regulators and sitting with them in the passenger seat rather than having them in the rearview mirror makes a lot of sense. There's a lot of guys that set up a shop and said, you know what, we're going to tokenize assets. Okay, so you create a token, but it doesn't mean you've created it under a Reg D or a Reg A or anything else. You've just taken an asset. You've said let's divide this by 100 million, print 100 million tokens against it, and then just send them out into the ecosphere and have it listed on Binance. Now, none of that really is that legal. And certainly you can take an asset and you can create tokens against that asset, but unless it's got a statement that's sitting there over in the Edgar database, and if it's been sold then to US investors or foreigners abroad, it's got to have some sort of regulatory stamp on it or a regulatory filing. We wouldn't touch anything that doesn't have a regulatory filing. Now, there's crypto companies out there that are listing these things a dime a dozen, and they list them a dime a dozen because people know that, well, first, the issuer will pay a nice big listing fee to them. And secondly, they're going to get some sort of hype or activity that's going to push up the value of it.
Right.
And I think that that's what you saw in the heady days of ICOs, which again, were just illegal. So I think that, by taking the regulatory approach, yes, it's more expensive for the issuer. And yes, it does take time. It'll take you 3 months to do a Reg D and get the paperwork in. And it's going to cost you some money in terms of getting the lawyer. But you're not going to get a call from the SEC in 4 years' time saying you raised money illegally, like maybe Telegram did, and then have to return $1.2 billion.
Mm-hmm.
And I think that what we're seeing right now is regulatory action by the SEC towards companies that did things incorrectly or did some things without even knowing that there were rules about this. I think we're fortunate in this panel is we're all older. We may not want to admit it, but I'm 52 years old. And I grew up in a very regulated environment. So to me, regulation is sort of what you think about when you're selling to the American public. I think to a lot of developers growing up on the West Coast that are in their 20s and 30s, they've got no idea the SEC even exists. And I think that that's where the space is.
Yeah, and I think that's absolutely critical. The only time you want the SEC involved is when somebody's done something, untoward towards you. But there's a generation, and I don't mean this isn't a generational thing. This is, we all believe in decentralized. We all believe in democratization, but you still need guides and rules for when things go awry. Look, if somebody comes in and breaks into my house, I want some sort of regulatory police department that's going to come in and look after me. And it's no different than when a company's digitizing an asset and selling it to the public. So whether we'd like the regulations the way they stand today isn't really the issue. It's to say they're there for a reason. Can they be improved? I think they can be improved upon it. And Douglas, you put it perfectly. Build around the regulations as they exist today. And I think the efficiencies can be there and the opportunities for digital securities, for digital assets, for digital tokenization. It's truly immense. But every day, and maybe I'm going to ask you, Curtis, have you had individuals coming to you to say, hey, I want to digitize this. Where do I begin? How do I deal with this? Because we do all the time. And the biggest headache that I find is somebody has an existing asset and it's so encumbered, and they just make an assumption because they saw somebody else to say, here's my building. And I saw this one case study done where they digitized that and they tokenized it and they sold it to 2,000 shareholders. And they said, how come I can't do the same thing? And then somebody else says, oh, I'll do it for you. It's easy for me to tokenize your asset and we can do this. But they're running afoul of the law.
Yeah, we see it all the time for folks come to us when they see someone else, one of their buddies or someone they know, or just somebody they see on Instagram, right, that does some sort of offering, and they say, well, can we do this as well? And then you explain to them the steps that they need to take to actually be, to not run afoul of the law. And a lot of times they turn the other way, right, or they find somebody else to do it for them. So, but it can be daunting dealing with the SEC and with FINRA. But one thing I have learned, and over the years, is that as once somebody said, it's a very immense environment, and they're always playing catch up. And sometimes if you work with them on stuff that you're working on, they'll find ways to kind of help you somewhat accommodate.
So I mean, the whole idea behind the Jobs Act, and I mean, we're over 10 years old with that, was again to democratize capital, and technology is there to afford that democratization and make it far more efficient. But it does sound like a handful of bad actors can really mess it up for companies, and the panel that we're speaking with today. What advice were you going to give? I mean, a big part of the panel, a big part of the discussion this week in the cannabis. So I had somebody come and say, hey, I've got a big field, I'm legal, I'm in Canada, I'm growing, I want to use a Reg A, I want to digitize my security, I want secondary trading, I want to go from A to Z. Who wants to start with that? What's the starting point, and how would I actually do that? I'm going to go from primary to secondary, and I want to do it compliantly. Who wants to take the first stab at that? We don't have any lawyers on the panel here, but let's say they've done the regulatory side of it up front. Douglas, you get a lot of people coming your way. I mean, I'm sure every day that you're going to say no to because they haven't set something up. Maybe you can share some stories in that regard.
Well, if you come to me with cannabis, the first question I'm going to ask is it cannabis or is it CBD? Because I won't sell cannabis in the United States, an offering for cannabis, because it's federally, it's still an illegal substance. And even if I was to do a Reg A and then sell that just in California, let's say, I'm still running afoul. And now CBD, no problem at all. I'll do CBD all day long for issuers. But the first thing I want to know is what I'm selling legal. That's the first question. And then another thing that I want to know is this something that I think we can sell? Do they have followers? Is it an exciting industry? Is it something that's got a great story? Is the issuer coming to me someone that can actually tell a story? Do they have a charisma? Because a lot of the selling of this isn't being done on a roadshow where you're going door to door and people are writing $5 million tickets. It's being done maybe over YouTube videos or AMAs or digital marketing. And so you want someone that can easily tell the story about what exactly they're raising, and it has to raise some excitement. If someone's got a huge following, let's say they're a rapper, and that rapper's got 30 million followers, and the rapper says, you know what, I want to do a new shoe line. Well, guess what? The odds are they'll probably be able to raise the money because they've got the charisma. They've got all these people that already believe in what they're doing and would be very excited about being involved. And we're doing things like that for some folks. But other folks will come to us and they'll say, I've got a strip mall in Texas. I want to tokenize this. I think I can get 50 million. And I say to them, I don't think this is for me to be able to help you with this one because I don't think anyone's interested in your strip mall in Texas. Then someone will come to me with like a really exciting technology to do with ESG. I've got one company that's working with us right now that's got machines that you put at dairy farms and they take cow manure and turn it into biodiesel. Now, this is a great story, not just for the investor, but also just for the world in general about the things that you can do. And large corporations are lined up to be with them, to be their customers on the back end. This is a full story that we can really sell well into the market. So a lot of the time it's about it's less about how much do you want to raise and more about, is there a story behind this? Is there support behind it? Or are you starting from nothing where nobody knows who you are and you're selling a strip mall in Texas? Because I can't help that person find the buyers.
Okay.
Yeah, and then feedback on that, I would say that a lot of folks I talk to, the first thing we say is, if you don't already have a following, you got to have a great marketing plan in place. But with the following, it makes it so much easier because you already have, you're trying to raise from the crowd, you already have the crowd's attention, right? So if you can't grab their attention, how else can you do that? That's really important.
I think the points on having a following and having, makes perfect sense. But I do also think that if you can articulate a message on whatever your offering might be to an untapped audience that was unable to participate before, I'm not saying it's easy, but their ability to participate and the regulations give it that. One of the areas that I think about is you might have a following base, whether it's your brand or in the case of you mentioned shoes, or it could be and I do believe on the I'm a Canadian, so on the Canadian side of it, from a cannabis sector, I get the gray or some of the areas in certain states that are black and white to say touching a leaf is illegal, but selling a security, that's a conversation unto itself. But my comment is more on like I don't have a following per se, but the regulations actually give me a brand advocates, specifically might be in the med tech space. So I had a conversation with a physician, and the physician said, I go, why are you looking at this particular regulation? Why are you doing a Reg A? And he said, well, because the one audience that couldn't buy into my company before was the one audience that always asked. And in their world, it was the nurses. That nurses knew more about their company, knew more about what they were going to do, their value proposition, in a medical device arena than anybody else. So then their challenge was to say, okay, can I reach those nurses? I know at least first it's know who your audience is. Do I already have them? Or do I have an audience that might like to participate today if I can share that story? So I think there's a couple of narratives. Yeah, definitely. Look, if I'm Kanye, well, maybe not Kanye this week, and everybody wanted to buy my $1 million shoe and I fractionalized it And maybe today, there's a lot of what's going on in the marketplace with that. But I think if companies take a look at whatever industry you're in and say, who can I touch, and can I effectively touch it with marketing that never got exposed to my offering, that might like my offering? And I'm not, and again, I'm talking to participatory, audiences that might say, I know more about somebody. I know more than the accredited investor about a particular medical device because I live and breathe it. And that's just an analogy. I had somebody come to me once that said, oh, we're going to get in the security business. And I said, well, who's your audience? I said, you want to branch out $100 million company, and who are you selling to? And he says, Peter, I'm not worried about that. And he says, I happen to know that, 100,000 retired security police officers that understand my business. I just have to be able to touch them. I'm not saying it's easy, but they understood their audience. It wasn't just a pray and spray and saying, I want the whole world to know what I do. It's defining your audience and reaching out to that audience, should you be starting at ground zero. So I think with even things like a Reg CF, companies and individuals have to recognize that, yeah, it's a whole lot of work, but do you have an audience? Do you have persona? Do you have that you can communicate with? And then we're going to look at digitizing and fractionalizing in the primary and the secondary. So I've seen companies go from ground zero to tens of thousands, hundreds of thousands of shareholders in private companies. But it was, these were 6-year journeys. To your point, Douglas, of just saying, everybody that says, hey, I want to raise some capital and I want to go buy some real estate and sell it to people, you better have a good value proposition to that potential audience.
I can give you 2 examples, like what you're saying. I also had a med tech device come to me and they said, look, we don't think we have an audience. I said, how many people use it? He said, 67,000 oncologists. I said, well, oncologists are probably accredited investors as well. Do you have their information? Oh, sure we do. Okay, well, let's send some emails then. Right now you've got a great audience there, and you've got an audience that uses the product, believes in the product, and is excited about it. I had a hotel in New York that came to me and said, we want to raise $40 million. I said, okay, do you have an audience? He said, no social media, nothing. I said, how many people have stayed in your hotel the last 5 years? He said, something like 12,000 people. I said, how many of these people have stayed there more than 3 times and spent more than $15,000? And they gave a list. It was like, 1,000. I said, okay, that sounds like accredited investors to me if they're in the United States. How many people were outside the US that have stayed at your hotel more than 3 times? Oh, it's, another 2,000 people. Okay, that sounds like Reg S. Do you have their information? Of course we do. All right, that sounds like, these are people that believe in your brand, that are using your brand, that have money. And so, a lot of people have an audience. They just don't know who they are. But yes, you have to identify the audience. You need to know what pools to fish in. And once you've realized what pools to fish in and what tools there are to go fishing, I think it becomes a lot easier. But you're right. There are 3 different legs on this stool. The first leg is understanding blockchain, which is where folks like us come in and we explain this. And yep, the issuer feels very comfortable. The next one is the legal, and we give them to the lawyer, and the lawyer gives them that legal comfort. And then they'll always come to the finish line and say, I've got all this done, but I'm really worried about the marketing. And so you need to find a good marketing firm that can come in there and that can help them, that can, lead them by the hand and give them that confidence. And there's a lot of marketing companies out there that are selling all sorts of stuff, but they're not all selling success. And I think that it's very hard to find the right flavor of the month every month that's going to fit your fishing campaign when you go fishing. And that really is what a raise is. I mean, it's fishing. Some guys already know where the fish are. Some people have no idea.
And what's sorry, I just had a quick comment on that. Yeah, what's very interesting about this conversation is that, yes, we are talking about the primary raise and marketing to your audience. I mean, these are absolutely fantastic questions to ask, right? But it almost seems like the success of the first raise and the ability of the management, the issuer, to know who their audience is, it will also play into the secondary market as well. I mean, if there's no initial story to tell, you can't expect there'll be a secondary market either, right? There's not much. So, it doesn't matter whether the fish is caught in the first, line or the second line in the aftermarket, there has to be. So I think, the ability of the issuers and their investor acquisition firms to go after and get to that market is also going to be equally successful in ensuring some liquidity on the aftermarket, right?
Oh, I think 100 for sure. If you've looked at, there was a interesting faith-based miniseries that, they build a huge audience and they're
Yeah.
primed for a secondary marketplace because
Mhm.
you've only got so many shareholders, but you're a known entity. Not unlike we might talk about somebody that might be a celebrity, and you might say, okay, you've got a huge following and you've got more followers than shares out there. You've got an opportunity for liquidity. But I think in every case there's that ability. But to your point, Kiran, yeah, the bigger your audience is, the better the opportunity you're going to have on your secondary. So Douglas, where do you see this headed from your perspective? You're talking to guys all day long. You've got a secondary marketplace, the liquidity side of it. You don't have market makers in the truest sense. How do you address that? Let's say, I've raised X amount of money. I'm going to want to go to the ATS. When do you make that decision to go on an ATS?
I'd say that every issuer that we have that we're raising capital for wants to go in the ATS as soon as possible. And so for them, it really is about, part of the marketing for their raises that you're going to be able to get out of this if you want to, in a year's time, if you're an accredited investor or whatever it's going to be for the investors outside the US. So liquidity, I think, is important, but again, it's always going to be restricted to 2,000 people, even on the secondary on these Reg D, Reg S's. And so liquidity is as much a notion as it is excitement, but also people trade stocks because there's news out on public stocks every day.
Mm-hmm.
And so if a public company isn't releasing information and news, there's going to be very little trading in the secondary market. So it's important for the issuer to understand that if they want to have a secondary market, that once they've raised the capital, they need to keep communicating with the world so that new folks may come in and discover what they're doing and come in and say, you know what, I'm interested in buying here. Otherwise, all you have is the initial buyers that are sitting there with an offer on your ATS, and the stock's going to go nowhere.
And that lends itself to say it's that constant relationship that you're having with your investors. Your investors are your brand advocates. They may be your consumers. They're more than just your shareholders. I mean, they're your viral component to sit at the coffee table and have a conversation with somebody else. But you need the media there. But you, the issuer, also needs to be able to communicate with them on an ongoing basis. I mean,
yeah, but which is the opposite of a private company. A private company says, I want to stay private because I don't want to have to deal with the public. I don't want to have to do quarterly reporting. I don't want to do a 10K every time I do, 6K every time I do a press release. I don't want to do a lot of press releases. I just want to do my work. Well, once you decide you want to do a token, that's going to switch a little bit, because if you want people to start trading it, to learn about what you're doing, you need to be more vocal in the market. And I think a lot of folks don't understand that, or don't. It's a learning experience for a lot of corporate CEOs.
And it's also important, I think, for them to understand that, it's not just one raise. They can come back next time, another raise, and, future raises as well, right? So they do have to build up this momentum. And, you can't do that. You need the combination of both the news releases, the marketing, talking to the public, and, having the strategy of, the blockchain tokens and making it easy to do that. I think for that reason, I mean, I think it solves many things, right? The primary raise, the follow-on raise, engaging with the community, and of course, future raises and liquidity in the in the secondary trading. I think all of them kind of go hand in hand. So it's a win-win strategy if you think about it.
Well, it's certainly been an evolution, and none of this could occur without the continuous evolution from a technology perspective, and getting feedback from the marketplace, and
Mm-hmm.
and some of the mistakes and missteps, and I'll even naive bad actors, and I don't want to say all bad actors. And some people, just as Curtis alluded to, they're doing it over there. They're tokenizing something. They didn't realize that they're actually creating a security in many cases. They're running afoul of the law with those. Sometimes it's just individuals just looking the wrong way. So if you're considering any of this, it sounds like, Douglas, that you're referring, hey, engage the parties that are going to make you successful, but more importantly, from the start, being you need your lawyers, it's not just the technology provider. Anybody can make a token today. And I don't mean that loosely, but you know what I'm at the baseline level, but it's absolutely useless if you're not looking at the regulations, dealing with things compliantly, and then taking into consideration, where am I going down the road? What is my secondary market? What is the education that I need for my followers? So all of these pieces, to Kiran's point, yeah, they all come together. And they're important. You can't isolate each piece one by one without looking for a longer term journey. What am I doing today? What am I doing in the future? Am I doing round 1, round 2, round 3, whatever that means? When it comes to your capital raise, it used to just be everybody did Series A, B, C, D after my seed kind of thing. We're just giving it different flavors and different terms today, don't you think? As far as whether it's tokenization, whether it's digitizing an asset. But I am hearing back over and over, depending upon the exemption, what are my limitations? Douglas, you said, hey, a Reg D, it's 2,000. So I'm dealing with a finite audience, both with on my secondary as well, then, because I can only have so many people buying and selling. That can be good, but the issuer needs to be aware of that, and the companies need to be aware of that. What about the fear of too many shareholders? I think that's gone by the wayside today because of technology, and whether they're shareholders in a security or owners of a token. Any comments on that?
I think that the more shareholders and the more distributed the token, the better for the secondary trading of the market. Obviously, if 95% of a token is still held by a company and the management and 5% is floating there in the general public, who wants to own that?
Mm-hmm.
Probably no one, right? Because at some point there's going to be a big dump, and the only reason that 5% was sold into the market was to get a price on something that's really being held by the company or the management. So I think that companies have to be very careful when they do a token. They have to remember that a lot of times companies will think about what's in it for me, and they don't think about what's in it for the token holder. And token holders are very smart. They look at a lot of different tokens if they're going to be buying a digital security. They've already seen a lot of different models before, and they want to know that what they're getting is something that management has skin in the game in as well, and that they own tokens, are getting compensated in tokens as well. But also that they don't have a huge position in tokens relative to what is being held by the public per se, or these other investors. So there's lots of different things that people look at. I always think, though, that the more token holders, the better, because you're going to get more liquidity.
I'm behind you 1,000%. I even think that's the case now with private companies from a securities perspective. The old adage of saying the more shareholders you have, the more headaches you're going to have. I disagree. I think the more participants you have, the more brand advocates you have if you're doing a good job, and if you have the ability to communicate with them when you're doing a bad job, they're more likely to not only understand your business, but even be more forgiving from that perspective. The worst thing that you can ever have is I don't know what's going on, especially in a private company. So shareholder communication and volume of shareholders, I think that's the way of the future, and that's just my personal take on it. The only, unless you're a private company that doesn't want to go after volumes of shareholders, and you go after a handful, that's a completely different business model. But if you want to build your brand and build your potential audience for now into the future, you can remain private today. Through platforms.
20 years ago, you couldn't get all of your investors in a room. If you're a private company, you'd have to send them all a letter, by post. Now you can set up a Telegram or a Discord, and you can talk to them all in live time. And one person asks a question, you answer it, and 300 people are satisfied with the answer. So you've done it very, very quickly. It's much more efficient to gather people together, to talk to them and to give them information. Technology certainly helped in the communication aspect for management.
Well, thank you. So we're going to close out on that. It sounds like communication, ATSs, and secondary trading's here to stay. What inning do you think we're in at? I'll go around the table as far as where this is going to be in the next 5 years. Are we in the first inning? Or are we in the fourth inning?
I'd say we're in the second or third inning right now with this. with extra innings to go. It won't end at 9 innings. It'll go beyond 9 innings.
It'll be beyond 9 innings. So we're at the early stages, Douglas.
There's a lot to learn, and one of the things you guys talked about was really you have to increase awareness of the issuers out there. That's the only way to make this thing really grow. And right now, it's still a private market. Still a private market.
Need to be educated.
I think that the stadium's been built. People are still finishing up on the rules, and we're just coming onto the field now. Because the audience, the crowd still doesn't know that the game exists. And so no use stepping onto the field until the audience is there to watch you actually play. So I think that we're really at this first inning. You know, if you talk to accredited investors, which is already a small part of the population, and then you dig into them and say, how many of you actually know what a digital security is? The answer is going to be maybe 3,000 people. 3,000 people in the United States. Now, if you go and you look in Southeast Asia, in Japan or South Korea, it's over 50% of accredited investors have actually hold a digital security. And so the US has got a lot of education, a lot of catching up to do, just as Curtis said. And so, you know, before you really start, you know, swinging at balls, you want to make sure that there's an audience to actually watch you do the swinging. And I think we've got the rules down. We're stepping on the plate. We've got members of the team. Everyone's ready to go. Now we're really, you know, it's about rustling up but it's chicken and egg here, right? You got to have product on your shelves before someone comes into your store, and you've got to give lots of different case studies of this is a different type of digital security that you can do, so people understand just how large this is going to be. And so, I think that we're just stepping onto the field, but I can see this is going to be a really big game.
I love how you put that. Stepping onto the field. The foundation and the stadium is built, and we're just starting to sell tickets, is what I'm hearing here.
And if I may push the analogy just a little bit further, it's a great analogy. We've got the stadium, we're going to get the crowds, we're stepping up the play, the players are there. Now we're to let in the hordes and the people, right? And as these people come in, we have to make sure they don't trample upon each other and kill each other in the process. And it's all very orderly, very regulated, yet it doesn't impinge on some of their freedoms, right? And that is kind of where some of the technology can also play a critical role. I mean, you know, regulation gets a bad rap, but there are some parts of regulation that are meant to protect and increase some safety, right? So I think that's the part where the technology can play a huge role.
Well, gentlemen, Douglas, Curtis, Kiran, I thank you for today's session. I'm more optimistic about it than ever, especially with the baseball metaphor going on here. And yeah, it's early in the game. I think it's the opportunities from an educational perspective. You know, they exist today, but they need to be, you know, these kind of panels need to continue to open the doors, so to speak, to just make the general public aware, make the issuers more and more aware, make the consumers more and more aware, because it's all about democratizing things and taking out the friction points and let everybody participate. So again, thank you all. We'll close out on that. We'll hand it over to Oscar, and I really, really appreciate everybody being here today.
Thank you very much.
Thank you.
All right. Well, thank you, everyone. Wow, what a session of having everyone this whole week. Thank you, everyone. Monday, Tuesday, Wednesday, Thursday, Friday. It was, as I said before to everyone, it's Cannabis Month. There's so much discussion within the sector. There's a lot of enthusiasm and optimism within the cannabis sector, of course, with President Biden making his announcement. I think it's rejuvenated everyone that there is something great coming in the horizon. As all the speakers, Curtis and Douglas and Kiran alluded to, there's still regulations we need to follow, but this is one of these sectors that definitely has a community build. It has a grassroots component that is definitely going to be able to benefit. And we've already seen it when they're utilizing Regulation CF and Regulation A+. Hopefully this week, what we provided you, as always at the Core Summit webinar series, the educational element, the pieces to get you started in your journey to look at how you can capitalize your company in a different way. And this is not to say that other methods are wrong. Absolutely not. We're just giving you the choices. And today you heard the last frontier in the private capital markets, which has been the missing link, the unknown, the one that got away, or the one we talk about, but is it real? And it is secondary market trading. And it was a great closing off to the week. And obviously, most of you will have lots of great questions along the way. And hopefully you'll reach out and we'll connect you with our great panelists, both on the legal, the accounting, the quarterbacks, the printer broker dealers, the secondary ATSs, so you can be successful with your cannabis company in your rate. Thank you again for an amazing Core Summit and 2022. We're closing up the year with the cannabis sector, and we hope to see you in 2023. It just might be that we will be face to face. Till then, have a great October, and we'll talk to you soon.